I think important part in today's world is uh, the way the India is growing, the way the lending is required, and the speed at which I think it will come in. I want to touch three things important from my point of view. I call it scale, I call it speed, and I call it soul. And soul being the third S in the entire part. Yes, after Shashank, you have Shekhar. After Shekhar is where I think it comes soul, is where I'll call the entire piece for all of us. For me, I'll generally call, I think, what is lending overview. We saw something from Shashank. I'll have another lens, I think, which comes in. You will have, I think, what is the required for 10 trillion economy, which India wants to become, how AI transforms each of the respective areas in which I think we'll build over a period. For us, I think it is a healthy double-digit growth for us. If you were to say, I think it's a growing book if you were to see it. Sorry. I think the pointer, if it can work on the screen, but I think you have probably a good scale which is growing on an average 14% YOY, whether I start from 16 to 25. I think I always take last 10 years and next 10 years as the basis on which one moves. You do find that the entire, I think, economy is growing well, India is growing well, with the entire loan book, I think, growing across the ecosystem. It is banks, NBFCs, and across, good at 40%, 14% growth, I think, which happens. More importantly, if you were to see the various buckets in which it moves, I think the entire journey has been decent except for COVID. We have less than 1 million, I think 1 to 10 million, 10 to 40 million, 40 to 100, and in terms of the entire part, even the entire part. The small ticket size, which we call it, especially under 10 odd million, has been the biggest beneficiary and has, I think, grown significantly. If industry has grown at 14, they have grown on an average at 80%, I think, across. These are context settings because that becomes the base for our 10 trillion economy for us. We generally feel there are 7 themes which drive the entire piece. I'll cover the 7th part. But important is manufacturing expansion. Out of the 10 trillion, we generally feel that 2.5 trillion is purely belonging to the manufacturing part. I think the share in the GDP should grow to around 20 to 25% based on the numbers. You will see that if you're 10 trillion, currently you are at 15% for us. What it will require in terms of lending, what will require in terms of efficiencies will come from, I think, when we add that. Infrastructure boom, I think it has to be on an average 5% of GDP is, I think I can go up to 6, but I go more with experts who have mentioned it at 5% for us. The service engine, I think, remains the biggest engine for us. I think 4 odd trillion and still remains the backbone. It contributes to exports. It contributes to the entire workforce, the manpower, the skilled manpower, I think, which India generates. The exports and global integration, I generally feel that what we see with GCCs, what we see with solutioning across, what we become the service to the world rather than only to service to ourselves. You will find that I think the entire global integration should add around 2 odd trillion for us. All these get supported with the human capital and demographics. India is going to be a young country till 2040 and will continue till 2047. And just see that from here on an average 20 more years, 22 more years, I think India enjoys the best part of human growth, and the capital required to support that will be an important part for the country. This also gets supported significantly by all the regulatory bodies, by the government, and by all of us. Bharat Fintech can be a classic way in which I think which supports and promotes each of these areas. The digital infra, I think, which we have, and the entire lot of that public, I think, makes it really, really useful for everyone to be there. I was hearing I think, Aadhaar and the new initiatives on Aadhaar infrastructure, which is happening, something which is happening on the lending side with account aggregator, and a lot with the UPI as an enabler becomes the 3 important parts besides, I think, whatever we see, how we use, how we are able to, I think, move forward. Yes, there can be a few things which we have to be cautious of. I think how the people are going to be on employed across for the country is an important item. It can cause an economic as well as a social imbalance. The reforms still can be classified, can be still faster. Yes, change in policy, change in thought process can be very, very different. The skill mismatch still is a big problem, and if I were to say many times across, we recruit people from the best institutes only to realize that they need to be trained, skilled in some manner to go and actually do work. And as the number increases, as the institute changes, as the demand is different, we have realized that there's a significant amount of skill, education to skill to implementation becomes an important part which has to be addressed. Geopolitics, I think world is not as good in terms of geopolitics the way it used to be probably 1995 to 2005 or 2005 to 2025. We generally see a very, very different world which also has to be a factor of whatever we do. Yes, there can be fiscal slippages. India has become an anchor at 4.3, 4.4% in terms of the entire piece. But at times, if the policy does have a framework issues, it can disturb the digital infrastructure. It can disturb, destroy the human capital not being utilized. It can destroy the three pillars which I said in terms of manufacturing, service, and the entire infrastructure, I think, which one should work on. But important, again, looks like that India is at a good place where you will grow on an average, 6.7 this year, on an average at 7% for next, I think, 8 to 10 years. At this pace, you will definitely become one of the largest economies, best employers, as well as suppliers or manufacturers for the world. This brings some part of, I think, a similar subdivision that SMEs still contribute maximum to the building up from 4 trillion to 10 trillion. So the incremental amount which these teams and etc. will grow in terms of jobs, in terms of economy, in terms of exports, in terms of the stability is where the entire part comes in. I generally say there are around I think almost 8 crores customers which are in the entire part, growing on an average, it contribute 30% of GDP, 50% of exports. Employs almost, I think, 25% of India to ensure that I think they provide the entire part. And there's a credit market still of 64 lakh crore is what I say. Out of that, what currently gets catered is only 34 lakh crore. So you still have a 30 lakh crore of market which is catered not necessarily by the formal banking and NBFC sectors. It still gets catered through various other parts, including self-funding, which will be done by many entrepreneurs and etc. I think still grows at 13% CAGR over last 5 years, 6 years. I think it has evolved from a PSL obligation to a core scalable business vertical. We saw 14% over there, but compared it is 9 and 13 rather than, I think, in real terms it will be 14 and 18 in entire piece. The good part is with UPI, with knowledge sections across, 90% of our MSMEs are digitally active. And that does mean that the entire DPI, which is the digital public infrastructure which is there, it becomes the backbone of making, solving, and enhancing, I think, the entire needs of the entire MSME sector. Very, very important part from the credit point of view that 11% of all these accounts in Electric got upgraded in last 24 months. And it is a very, very important part that I think in terms of the credit profiling, I think how do you see them? And why does it become important? Because then the digital public infrastructure can work more efficiently. It can lend more smartly. It can actually be the real engine of growth as you move forward. And the delinquencies are at a multi-year lows. It is less than 2% for us in the entire ecosystem. All these generally lay the real foundation for lending, for digitization, for an artificial intelligence led analytics to become the backbone and in various areas resulting into significant cost savings, I think, which will happen. I move to, I think AI, which becomes a driver of lending transformation, and generally it leads to industrialization, it leads to return on assets, and it leads to the AI adoption across. In terms of industrialization, I think you're moving towards standardized platforms. Shashank also shared, I think, a few minutes back that yes, from something which was to be a fragmented, different systems and etc., you want to be standardized, you want to be integrated, and you want to ensure that there is a good seamless solution which gives in. All these leads to a significant thing called ecosystem and a single solution rather than many solutions and fragmented way of working. You have something which used to be called as pilots in many technologies. I think it has reached to the production stages as now and in the future. And it is, I think it is also embedded across lending, whether it is IT, ops and risk rather than only frontline. We always thought that it was only the frontline guys who will be requiring many of these tools, but it is deeply embedded into the entire ops side, entire the risk side, fraud detection side, and then the IT side. In terms of the value and the return on assets, you will find that I think the value tracked in hard numbers. This is a good part of a technology when it comes in that you actually start measuring it rather than only seeing that as a wow factor. And measuring ROAs, which is called return on assets or return on equity. I think both becomes an important parameter for everything. I have seen it, I think it is driving efficiencies and revenues uplift. It has already started seeing probably 8% to 12% contributions right now with a potential of significantly higher. I have my own number vis-a-vis I think what the experts say, which I'll share this in the end. From innovation to core, I think operating processes, I think we have seen this happening, and I think it is improving end-to-end transformation for all of us. But important part is whether it is LLMs, whether it is AI platforms, whether it is agentics, AIs, each one of them actually results into the big AI assets which result into the transformation on the efficiency side. They're also becoming the drivers of structures, which is called, I call the org structures, cost structures, and the margins. And why I call it org structures, technology helps you to probably, I think, integrate rather than, I think, make it silos. And it ensures that you can process lot many things. You can have sourcing from 4 parts, but still the processing still can happen at the back end. The servicing still can happen at the back end, which is done largely by technology. We have seen this reduction of cost across and cost to income ratios, so most important things which is there. I think AI value creation actually, I think growing 10 times in probably 2 years. I think it is already pegged at around 6 odd trillion in terms of the various values, I think, which happen. The potential of cost to income, I think it can be reduced by 350 bips to 700 bips, and if you multiply with the total market, total cost which is across the banking, this is across the world, not necessarily I think only in India, where one sees that you can have an impact of 3.5%, 350 bips or 3.5% to almost 700%, 700 bips, 7% in terms of the entire piece. The CAC, which is called customer acquisition cost, has gone again reduced by almost 30-35%. I can use a classic example. In 811, we acquire a customer. We do it in 3 minutes, open an account in 3 minutes. We open 30,000 of them every day. And that shows the real scale that the cost has reduced by almost 70-75% in terms of what it used to happen through the physical channel. Second, the scale increases by four times in compared to what you do through physical channel. So cost reduced by 70%, scale going up by almost 4.5 times, no people required, and the entire DPI getting into action. The voice bots, I think they contribute from different ranges, different organizations, 25% to 75% of inbound calls, outbound parts, sourcing, and that's where result into CAC. A classic examples, I think we have seen it across there. Process simplifications for us, and for everyone, has been the primary striver or driver for many of these AI-driven cost structures and margins. But I can tell you that I think you start with fraud detection, and then you move to the real efficiencies in terms of these processes, reducing turnaround times, the final thing, and giving the real benefit of working capital and working capital management to each of these entities. Large of them will be SMEs, large of them would be even I think mid-markets which get benefited the most. In terms of augmenting humans and AI, it is not limited only to AI. I always say, I think the human part of lending, the human part of understanding, the human part of assessment is a very important part of AI rather than, I think, only religion. Ethics is an important aspect which I always have seen, have covered. In the study of human-computer interaction, you have realized that I think computer or technology will be able to do 87 to 88% of the job. You still will remain that 12%, very significant. And for the high-value items, I think it remains, I think the opposite of that, it is 12 and 18, that 88, you require 88% of human and 12% of technology doing the entire base work. There are exceptions, there are empathy parts, I think, which can happen, which, yes, will AI develop over a period, will technology catch up over a period? Some parts, yes. You have a good amount of bots which can speak to you, you can have a good amount of technologies which will be developed over a period to make more and more human part, but you still will have the empathy part and the ethics part being an important element which will differentiate, besides structuring, solutioning, understanding the needs, and I think going forward to the next level. It is also important that I think you should be consistent, you should be able to communicate, you should have a pattern, you should be able to gauge much faster, even much faster even than the customer himself or herself will know in terms of the entire piece. And you do realize that the automation has a significant amount of savings and business generation which happens from, I think, each of them. Important in each of these parts is, I think this is and rather than or. Many people do converse. Is it human versus AI, or it is human and AI, or it is human or AI? I'll say between or and versus. I think it is and which becomes the most important part of driving the entire part. I think it is important that AI is a co-pilot, not an autopilot, and that remains the way, the nerve center of building future of lending. Having built many parts across, I have realized that people and what people will be able to build, what people will be able to develop is the biggest X factor besides everything what you do in technology, machines, algorithm, agents. And each of those get overpowered significantly with human thought, human intervention, and human action. So for me, I think it's an autopilot, no, it's a co-pilot, yes, and important is that it becomes a real tool for us to move forward on the technology side. It becomes a real tool to building lending in the country. So that's all from my side. Thank you. I have a couple of minutes for questions and trying to ensure that be within time and have anybody has a question, I'm happy to take. We have got 2 minutes. No, thank you. Thank you very much. Yeah?
I would like to request Shashank sir to please come up on the stage to felicitate Shekhar sir for this amazing, insightful presentation. Can we give them a huge round of applause, please?